Bitcoin is a pumping. Let's freaking go. In today's show, I'll be breaking down the latest Bitcoin technical analysis and quoting the high priest of Bitcoin. Spoiler alert, Roger tried to hijack Bitcoin with Bitcoin Cash. He threw billions at this moronic idea and lost. Scammers go to prison. The end. Also in today's show, Bitcoin post-halving price consolidation can last for 2 months, according to this Bitfinex report. I'll also be sharing Hong Kong Bitcoin ETFs are not enough to absorb the US ETF selling pressure, as well as breaking news, MicroStrategy to launch Bitcoin-based decentralized ID solution, as well as trader who called the 2021 collapse issues a Bitcoin alert and says Bitcoin may be in for more downside. I'll be sharing his latest targets. We'll also be discussing Cathie Wood raises her Bitcoin price target and says institutions may push Bitcoin to this astronomical level of 3.8 million per BTC. We'll also be taking a look at the overall crypto market. All this, plus so much more, in today's show. But anyways, fam, if you're new to the channel, important, make sure to subscribe to receive daily premium crypto news alerts every day, just like this. Also equally important, if you're gaining value out of today's show, pump the like. It helps pump the stream, and it's greatly appreciated, as always. Today is pod episode number 1627. I'm your host, JV. It's May 2nd, 2024. Another Thursday as we hit the end of the week. Bitcoin is up $2,300 on the day. Nice little recovery, back above 59,000. Let's take a look at our market watch as we do each and every day. Bitcoin up 4%, now trading at 59,200. Ether up 3.5%, trading back at around 3,000, while Solana up 12.5%. Even Cardano up 5%. And check in now the coin market cap. We can see the crypto market cap sitting at roughly 2.19 trillion with 90 billion worth of volume for the past 24 hours. Bitcoin dominance 52.7%. Ether dominance 16.3%. My question for the broskies, how high will that Bitcoin dominance climb for this cycle? Let me know your thoughts in that live chat. And checking out the top 100 crypto gainers for the past 24 hours. Pepe leading the pack, up 23%, followed by Arweave, up 20%, followed by Bonk, up almost 20%. Below that, we have Whiff, Jupe, Floki, Sol, Tau, and IMX. Now, which alts in particular are y'all most bullish on for this bull run? Holla. And checking out the crypto bubbles to get a visual perspective on the day. Finally, everything back in the green. Past few days, everything has been bleeding, getting Rec City and in the red. And zooming out on the monthly, still got Rec City overall. A lot of big corrections for the altcoin market. And checking out the Crypto Greed and Fear Index, we're all the way down in fear. It's been a very long time since we visited fear. We're rated a 43. Yesterday was a 54. Last week a 72. And last month a 79 in extreme greed. So there you go. But anyways, let's kick it with some Bitcoin technical analysis, aka astrology for the men, for the broskies. Bitcoin may have shocked some with its move to 56.5 on May 1st, yesterday. But in broader terms, this bull market pullback appears cathartic to the market health, as Checkmate shows a gradual deleveraging across Bitcoin futures has been ongoing since Bitcoin's latest all-time highs since mid-March. This, he argues, is putting an end to the bull market excess. Quitting them here. For those of you around in 2021, the Bitcoin bull market, you will remember the massive derivatives-led deleveraging events which killed it. Are we seeing derivatives-led flush out today? I don't think so. This chart compared the come down from Bitcoin's trip to 58,000 during quarter one of 2021. Ironic how close we are in price action. Talk about deja vu, comparing the previous bull run to the existing. And Checkmate reference continued flat funding rates across derivatives as a clear distinguishing factor between the market now and 3 years ago. Quoting him again, funding rates have cooled off gradually, not violently, which is very healthy to see. It suggests we didn't see a massive futures margin call yesterday. So with that, attention turned to other sources for the latest Bitcoin price cascade downwards, one which at the time of writing had failed to recover much beyond the lows. Quoting them here, futures markets also saw two statistically significant deleveraging events prior to this sell-off. We did hit two overheated points on the rally into the 73,000 all-time high, but it cooled off quickly. Again, doesn't feel like derivatives were the dominant factor in this Bitcoin sell-off. Now let's discuss Bitcoin sliding below the ETF cost basis on the topic of ETFs and what could be a knee-jerk reaction to the Bitcoin price performance by investors, even BlackRock. iShares Bitcoin Trust, which is iBit, shed nearly 40 million, its worst day on record. A similar story was visible for all the ETF products, with ETF flows across the board negative per data from sources including UK-based investment firm Farside. The largest outflow came from Fidelity Investments of 191 million, as outlined right here, quoting Mikey Bull. Bitcoin price path to create more fear across the market and then bottom for upward continuation. IBIT experienced 36.9 million in its first ever outflow since the ETF approval due to the price currently being below the cost basis. Remember, in every Bitcoin bull cycle, good news always signals the top, while bad news signals the bottom. Now, on the discussion of the crypto greed and fear index, as I pointed out, we're finally low as we've been in a very long time, currently rated a 43 out of 100 in fear. In quoting Max Kaiser, spoiler alert, Roger Ver tried to hijack Bitcoin with Bitcoin Cash. He threw billions at this moronic idea and lost. Scammers go to prison. The end. Now, if you missed the news, we broke it down yesterday. Roger Ver got arrested on tax fraud for allegedly owing $50 million to the U.S. government, even though he denounced his U.S. citizenship and became a citizen of Japan, I believe, a decade ago. So there's been a lot of controversy there. So let me know your thoughts on all the stories. Let's dive into our next story of the day and discuss this consolidation. Bitcoin post-halving price consolidation can last for 2 months. That's right. According to analysts over at Bitfinex, Bitcoin could experience up to 2 months of this price consolidation following the halving. The latest edition of the Bitfinex Alpha Market Report notes Bitcoin can continue to be the price action benchmark for the crypto market in May and the leading indicator for the entire crypto market cap. According to the report, the macroeconomic environment is more resilient than its previous years, and the likelihood of a rate cut remains low, at least for the short term. Furthermore, the analyst said that general consumers and businesses are better prepared and informed about the state of the underlying economy when compared to the previous crypto market cycles, quoting the report. Consequently, we believe we could see a 1 to 2 month consolidation of the Bitcoin prices, trading in a range of swings of 10,000 on either side. Let me know if you agree. The report adds that any positive impact of the Bitcoin price following the halving, which has reduced the supply of the new Bitcoin to the market, will be seen in the later months, quoting the report again. At this point, the economy is also expected to be performing better, having achieved a soft landing and avoiding a recession. And various crypto traders offer similar views on Bitcoin's recent consolidation from its all-time highs we hit. That was mid-March. Feels like yesterday. Mikhail Van de Popp shared that the Bitcoin dominance may have peaked as traders begin to shift liquidity to the alts. Crypto trader Matthew Hyland echoed this, highlighting Bitcoin's market dominance is losing major support. The Bitfinex Alpha report also dived into technical details of Bitcoin's dropping market dominance, noting Bitcoin halving historically sees attention shift towards the alts, which rally and gain the market share. Quoting them again, this shift occurs as Bitcoin's reduced supply growth rate is seen as long-term bullish development, which increases investor risk appetite, leading to investors to seek potentially higher returns from alternative cryptos. Now, Ether's recent market performance has seen it outperform Bitcoin in gains for 2 consecutive weeks, a metric which last occurred all the way back in February of 2023. The analysts add that a 7.5% increase into the ETH/Bitcoin metric marks ETH's strongest weekly gain against Bitcoin since the start of the year. The report also highlights Ether's long-term role as a proxy for the alt market, making it historical first mover before other alts catch up in terms of market trends. Now, Checkmate, the lead analyst over at Glassnode, commented on Bitcoin's recent consolidation. He explained that a gradual deleveraging across Bitcoin futures has been ongoing since Bitcoin's latest all-time highs in mid-March, and the current local high family is sitting just north of 73,000 $800. Let me know when you feel we're likely to re-enter price discovery, eclipsing the previous all-time high of 73.8. Holla. Do you think that happens here in May? Do you think it'll be a while? Maybe not till the following month. I want to know your thoughts, fam. Let me know. Let's move into our next story of the day, the latest from Hong Kong. Headline reads, Hong Kong Bitcoin ETFs not enough to absorb the US ETF. Selling pressure. That's right. The inflows from the recently launched spot Bitcoin ETFs in Hong Kong are not enough to cover the outflows from the 11 United States-based spot ETFs. So far, Hong Kong ETFs saw 217 million worth of net inflows this week, according to a May 2nd post. And the inflows are less than 300 million worth of net outflows generated by the 11 US spot ETFs this week, according to Dune Analytics, as outlined here. The institutional inflows from the ETFs were a significant part of the current Bitcoin rally to new all-time highs. And by February 15th, Bitcoin ETFs accounted for about 75% of new investment in the world's largest crypto, as it surpassed the 50,000 mark. Meanwhile, Fidelity's Wise Origin Bitcoin Fund accounted for the majority of May 1st outflows, selling over 191 million worth a Bitcoin, and Grayscale's ETF accounted for the second largest daily outflows of 167 million worth of Bitcoin on May 1st, according to the Farside data. Now, the first batch of the Hong Kong Bitcoin and Ether-based ETFs launched for trading on April 30th, creating excitement amongst crypto holders. However, trading activity has been disappointing. The Hong Kong-based ETFs only amassed 12.4 million in trading volume during the first day, which pales compared to the first day trading volume of the US spot Bitcoin ETFs, valued at 4.6 billion. That's right. This is a high figure considering the size of the Hong Kong market, equivalent to 1.6 billion worth of trading volume in the US. Quoting Eric Valchunas, you have to understand that Hong Kong is 168th the size of the United States. So while the inflow is relatively small, the debut of the Hong Kong ETFs can set a significant precedent for over the other jurisdictions, according to James Woe, the founder and CEO of DFG, who shared the ETFs open up the Asian markets to crypto exposure, which can likely push the prices up in the long term as more countries likely follow the footsteps of Hong Kong as well. So could Bitcoin revisit as low as 50,000 after this ETF debut? Let's touch upon it. The debut for the Hong Kong ETF proved to be the sell the news type event for Bitcoin holders as Bitcoin fell below the 60,000 psychological mark on May 1st. In fact, we tapped 56, but we have already recovered quite well, currently sitting at roughly 59,000 at the time of this recording. And quoting another analyst, Jag Cooner, while the price predictions are not appropriate based on these, the short-term hodlers is a crucial support level for Bitcoin to hold, and on losing it, or the average ETF buyer cost basis, there's a high likelihood that there's a cascade down to the low 50,000s. So let me know your thoughts. Do you think we'll surge right back above 60? Do you think we'll maybe potentially touch as low as 50,000, continue correcting? Do you think we'll have continued sideways trading action? Let me know your thoughts. Anyways, let's discuss the latest from MicroStrategy. Headline reads, MicroStrategy to launch Bitcoin-based decentralized ID solution. That's right. The largest corporate holder, Bitcoin, has announced it's going to launch a decentralized identity solution on the Bitcoin network that uses ordinal-based inscriptions to store and retrieve information. The solution is called MicroStrategy Orange. Let's go. It was unveiled by Saylor during the company's Bitcoin for Corporations conference yesterday, May 1st. MicroStrategy Orange is an open source, not dependent on side chains, and can process up to 10,000 decentralized identifiers in a single Bitcoin transaction, so Saylor claimed, quoting him here. It aims is to deliver trustless, tamper-proof, and long-lived decentralized identities using only the public Bitcoin blockchain as a data source, according to an unofficial draft document of the solution shared by MicroStrategy on GitHub. The decentralized identifiers will allow us to denominate to the same way the real-world identifiers are not tied to Bitcoin addresses and transactions. And you can see Saylor releasing this here yesterday as a speaker for the corporations Bitcoin for Corporations conference. MicroStrategy Orange comprises Orange Service, Orange SDK, and Orange Applications. Orange Services allows users to issue these DIDs on their personal or personnel and deploy applications, while Orange SDK and Orange apps provide customization tools to integrate specific services on mobile and desktop devices. One application already built by MicroStrategy is Orange for Outlook, which integrates digital signatures into emails to ensure recipients can verify the true identity of the sender. The onboarding process involves accepting an invitation email signed by MicroStrategy DID, which will then generate a unique DID, which is a public and private key pair for the user. The user's DID and public key are inscribed on the Bitcoin network, so they can start sending out invitations to their personnel to create their own digital identity. As outlined here, this is how the sign and verify workflow would work. Now, the firm wants MicroStrategy Orange applications to extend to other messaging platforms, social media networks, and applications in the e-commerce, enterprise, and fintech industries. It comes as MicroStrategy just reported a $53 million net loss for the first quarter on April 30th. However, the reporting uses the traditional accounting method, which didn't factor in the 65% increase in the market value of MicroStrategy's now 214,400 Bitcoin, worth $15.2 billion at the time over the quarter. And yes, they're continuing to stack sats, as we announced the other day. They just made another purchase, and I don't think they're slowing down anytime soon. So there you have it. But anyways, let's keep the show a-flowing. Next story of the day. Let's discuss downside potential. You know, this is the most bullish podcast for Bitcoin, hands down. It always has been, even during the bear. But sometimes we got to share some potential downside targets, and then we'll dive into a very bullish $3.8 million prediction from every broski's favorite Bitcoin superwoman by the name of Cathie Wood. And then we'll dive into some live Q&A. Welcome everyone joining the stream. So yeah, the headline here reads, trader who called the 2021 collapse issues a Bitcoin alert and says Bitcoin may be in for more downside. So here's his target. And we're referring to Dave the Wave. He shared on X that he is closely watching to see if Bitcoin will hold support at the key Fibonacci retracement level. And that level is 58 G's, baby. We're currently 1,000 above it, which is pretty dope, but quoting him here, I don't really see too much drama in Bitcoin at the moment. Still in the range, still some wiggle room down to the 0.382 fib. Now, the standard of the previous consolidations, perhaps much of the nervousness, comes from the fact that the price moves in multiple thousands now that it is so high, whereas in terms of percentages, it is Bitcoin normal. It's a good point. The higher the price goes, it seems like maybe a big correction, but it's very minuscule if you consider the number. So the analyst warns a break below the 0.382 Fibonacci, which is around 58,000, can send Bitcoin plummeting to around 48. So that means if we don't hold 58,000 as the line in the sand, the analysts can potentially see us dropping an additional 10,000 to 48 G's, quoting them here. 58,000 is the 0.382 real retracement of the recent move, as commensurate with the previous. Effectively hit now. Let's see if it holds. If not, could be for a larger Bitcoin correction down to 48,000 odd. He also warns that the altcoins will likely plummet if Bitcoin continues to decline. If Bitcoin moves down further, most likely the alts will too. I have some bids set. Well, precisely. That's why we pray for Bitcoin to crush and crush parabolic ascent. Because if we dump, and if Bitcoin did hit 48,000 and have another massive correction, you know what's going to happen to the altcoin market? Wreck City. Like some of your favorite alts are going to be down 40, 50, 60, 70%. So that's the nature of the game. That's the game we play with Bitcoin. Now for our feature story of the day, Cathie Wood of ARK Invest is predicting Bitcoin hitting 3.8 million per coin by the year 2030. That's with a 5% allocation from the major institutions. So let's break this baby down. Headline reads, Cathie Wood raises Bitcoin price target, says institutions may push Bitcoin to this astronomical level. Here's the latest report. ARK Invest CEO Cathie Wood reportedly raises her price target for Bitcoin based on an assumption of greater institutional investment in the top digital asset by market cap, which we call Bitcoin. According to the new report by Benzinga, Wood's latest prediction is that Bitcoin will soar to 3.8 million per Bitcoin by 2030. Wow, 6 years away, family. That's if institutions decide to allocate slightly more than 5% of their portfolios into Bitcoin. And speaking of portfolio diversification and allocation into the biddies, BlackRock published a report, I've covered it numerous times here on the pod, that their recommended Bitcoin allocation for an investment portfolio is 84.9%. Let that sink in, mofos. Just saying. The new Wood prediction made at the New York Investor Day in March increases her previous prediction by 2.3 million. Quoting her here, last year we put all of our bull case for Bitcoin. We put out our bull case and it was 1.5 million. With this institutional green light that the US SEC has provided, kicking and screaming though it did, the analysis we have done is that if institutional investors were to allocate a little more than 5% of their portfolios into Bitcoin, as we think they will over time, that alone would add 2.3 million to the projection I just gave you. So can you see a 3.8 million Bitcoin by 2030 with a 5% allocation from the institutions? Let me know. Now, Wood is referring to the SEC approval of the spot Bitcoin ETFs, which includes one operated by ARK. The ETFs, which launched back on January 11th, have attracted tens of billions of dollars in investments and are seen as the most successful launches in ETF history. The ETFs allow institutions to access the biddies. Now, if Wood's prediction turns out to be accurate, it would mean the Bitcoin would increase from its current value by more than 6,572% in about 6 years. So there you have it, my crypto fam. Let me know your thoughts on Cathie Wood's latest updated prediction of a $3.8 million biddy. Now, again, that's based off of these institutions allocating 5% or more of their portfolios into Bitcoin, right? So hypothetically speaking, if they were to do 10%, we're talking, what, $7-8 million Bitcoin? Now, what if they actually did 85% as BlackRock suggested in their report? Holy moly. Now, personally, I think it's going to be not instant. I don't think all the major institutions just dump 5-10% of their assets under management into Bitcoin, but I think it'll be slow and gradually as well. And I think 5% is extremely conservative. I think everyone is going to want to be invested into Bitcoin and have exposure to the most greatest appreciating asset in human history, the only form of perfect money to ever exist in human history. What's the alternative, right? Where do you park your capital? In the apex predator, which is mathematically guaranteed to continue rising and purchasing power? Or do you park it in all these other alternative, currencies or stocks, or what are those other things? Bonds, the junk bonds and all that crap, which is destined to lose your purchasing power, right? Those who save in fiat currency, we have a name for those folks. What do we call them?
People that use fiat.
So don't use fiat as a store of value because, as Sailor would say, it's a melting ice cube. You're guaranteed to lose your purchasing power. So where are you going to park your capital? You park it in the king, Bitcoin.
Currency. We call them poor. We call them poor.
So 2030, and can you potentially see a multiple 7-figure Bitcoin sooner than 2030? Because with 3.8 million as her projection for 2030, that means we can hit 1 million a lot sooner than anticipated. Potentially this cycle, according to some analysts, stock to flow shows between 100,000 and a million between 2024 and 2028, right? We got the billionaire venture capitalist Tim Draper predicting $250,000 this year in 2024. We got Samson Mao of Jan 3 projecting $1 million occurring this year, right? We got Max Kaiser, always bullish. What does he say? Short term, 200 and I forget the exact target, 220,000 short term, 1 million. Long term. And long term in crypto is like a year. Could be, right? Short term, maybe less than 90 days. So let me know your thoughts. Right now, we're sitting pumping over 2,000 on the day. We're sitting above 59,000. A modest 2x for this cycle is going to take us to 120,000. 6 figures inevitable this cycle, in my opinion. Let me know your thoughts, family. Now, as a cycle peak, I can even see 750,000 occurring by next year. Can 1 million occur? Anything is possible. So I don't judge. I don't underestimate and none of that stuff. I understand Bitcoin has no top because the fact is fiat has no bottom. And if the dollar did happen to hyperinflate, as some economists are anticipating, Bitcoin could just go through the moon, right? Blow past your wildest imagination and all those targets, crazy targets we cover on the show here every day. It can happen sooner than later, but we don't know when it's going to happen. But one thing is for certain, Bitcoin will continue to rise because that's what Bitcoin does. For the past 15 years, the most astonishing chart that I have ever seen, and I'll have to pull it up. Maybe in tomorrow's episode, I'll pull it up. But we have basically the Bitcoin versus USD 15-year chart since the inception of Bitcoin. And the trend is clear. Bitcoin, dollar. Yeah, I mean, Bitcoin goes up in USD. USD goes down in purchasing power. And that will continue. That trend is not going to end. The trend is your friend, and that trend will continue. It's just what it is. Yeah, I mean,